Good morning, traders and investors. Are you guys ready for another round, another week? Of course, with your guys here on Pre-Market Prep. Joel Alconen's back, so definitely hit the thumbs on up. Let's get into today's action. We'll talk about, of course, Fed Chair Jerome Powell's rug pull here from Jackson Hole's symposium. We'll talk about some of these comments and, of course, take a look now at the bear case, the bull case. We'll talk a little bit about quantitative tightening. We'll take a look at buyers, the battle for the US EV buyers incentives. We'll talk earnings from PDD. And we'll get into, of course, our special guest, Tim Quast, founder of Market Structure Edge. Excited to go ahead and get into today's action. Welcome to it, Pre-Market Prep, and let's get this morning started. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Alconen.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Let's bring on the guys are back. Dennis Dick, Joel Alconen.
Good
What's
morning,
up?
good
What's
morning,
up?
guys. How you doing?
Good to have you back, Joel. I know that you accidentally left a rock on the sell button, but you can remove that rock and we can move it. We can move it off.
No, I'm back.
I was blaming you, Joel. I was
You
blaming
can't
you
blame
for the
me.
sell-off, but then we just analyzed in the pre-market show because I thought
Correct.
the last time you left the market sold off too, but we actually reanalyzed, and the last time Joel left the market had a substantial rally. So it may not be Joel's fault. We're not 100% convinced. We have to get more evidence, but right now it may not be Joel's
on the
fault.
weekly, I have it for you guys. On the weekly, it was the week of July 18th, and the market actually went up that week. So can't blame me for everything, but glad to be back. Had a great time. I just got one true story for you from the trip.
Okay, let's go.
So I don't think that the people in Ohio realized that I was going through Ohio on the way there, right? Because there weren't any problems, and I didn't get pulled over or anything. But on the way back, coming back from New Jersey, you go through Pennsylvania, you got through the Pennsylvania Turnpike,
Yes.
and they tried to stop me from coming into Ohio. They closed all the roads from the Pennsylvania Turnpike to the Ohio to get in the Ohio line.
Remember they did that to you in COVID too.
They completely closed, and we had to go through this major detour. And I just think that they're so upset about that loss last year. They knew I was in the they knew I was in the state of Ohio.
They're salty.
And they tried to keep me out of it. But you know what? Good thing Siri in the back roads and everything, and we
Siri
found our
took you
way.
through it. Siri for the win.
Siri, thank gosh for Siri. Thank
Siri
you
for the
whatever
win.
Google Maps, Waze, whatever super
All of it.
satellites Lisa
They
was
can't
using.
keep Joel in Ohio or through Ohio.
Yep, there you go. But we're in the red by 36 and a half
Yeah.
handles at 40.23. We have crude back in the 90 handle, up 45 cents at 93.51. Gold, man, no one wants gold. Down 11.10 at 17.38.70. Silver in the red. That's down 32 cents at 18 and a half. Bitcoin, oh my Lord, under 20K, down 740, 1960,
Back to the
680. Ooh, boy.
Yep.
So it needs to hold. And Ethereum futures, they're down $107 at 14.30. And I just want to know that, I mean, inflation didn't peak we had an inline CPI number, right? Big deal. I mean, who thought that all of a sudden, who was going through the 2023 interest rate reductions? I mean, where did that story ever come from? I mean, I saw the headlines. I saw what the market did. I mean, what did I miss? We haven't defeated inflation. We haven't defeated inflation, right?
Yeah.
It was an inline number, and you were talking about that rally. So, Dennis, you were going over some of Jerry's comments, and the market rallied. It gave him a little chance to be tough, right?
That's what it
Right?
was. It gave him
Yep.
a chance to be tough, and he was tough. And I think what spooked the market the most was, some questions coming, and the answers were not what the market wanted to hear. What the market was hoping is that we peaked inflation. They want to hear more about July peaking, and that the Fed can now, get a little bit easier on the interest rate hikes. And that's not what we heard at all. Even to ask, the questions about, asset prices. He wasn't worried about asset prices right now. What Powell is worried about is inflation and bringing it back down. So it's not good enough that it's just peaked. He wants to bring it back down, and he mentioned the 2%. That will be impossible. They will not get it back to 2% for a very long time.
I don't think ever.
It will. It's possible they can get it back down on the BS CPI. I mean, it's never been 2%, so it's been a BS number forever. It's always ran 6-7% really in real, dollars. We know because they calculate it differently. We've talked about that for years. But when it's running at 8%, 9% on the BS CPI, it's really cooking 14, 15, 16, and that's what we're feeling. So, I mean, for them to bring it back down, even the CPI to 2%. Is going to be nearly impossible. If that's what they're trying to do, they're going to have to get more aggressive. And that's what the market is fearing here now. And that was the rug pull. So we didn't get any dovish comments whatsoever. We didn't get any indication that he's going to be done in September. We didn't get any indication of any of that. He said they'll be done when inflation is back down. And that is going to be a very long time. That means he's not going to be accommodating this market for a very long time, and that's why the rug pull happened. And that's what we've been talking about. Me and Mitch last week talking about this multiple times. I mean, I've been raising cash, tweeting it. I'm like, this rally from June, from the bottom in June to the middle of August is maybe one of the stupidest rallies I have ever seen in my entire life. We called it originally. It needed a little retracement, but to come back on a stock like Apple, Joel, from the gutter, a 120, from 130 and get all the way back up to a new all-time high is just idiotic. Who's ever buying Apple at 176 it's just dumb because you're trading 26 times, you're an aggressive Fed, and nothing added up. So, I just look at that and just think, I got to hedge. I've got to do some selling. I started hedging my Apple early. But, I've raised up cash, and I did, sell some stuff near the top. But I was selling all the way up. I was definitely about a week early. If you've been listening to this show, I was about a week early before the sell-off. Early August was like, I'm lightening up. And then, we get into, just kept rallying. I'm like selling more stocks out of the long-term portfolio because it's just too much, too fast. We came up over 50% from the lows.
I know.
And nothing got fixed. So this was a gift. This rally that we had, and now all of a sudden, you sell it all off, and basically 2 days you lose 200 points, which is nothing short of absolutely incredible. I mean, talking from 420 down to 401.
It was all Friday.
It was all one day. It was an incredible sell-off.
Yep.
And it was deserved. It was right. The market, finally woke up a little bit, and that was the problem. Is this market is just so. It's made up of so much. We've talked this before. The market's made up of so much dumb money now that it just doesn't price in anything. People who say, the market looks ahead 6 months don't know what they're talking about. It doesn't look ahead 6 days. You know how obvious it was that Powell was going to be hawkish? I'm start questioning. I was like, well, maybe it is priced in. Now, none of it was priced in. The market right now is made up of too many stupid people. Maybe it was more efficient before. Right now, it's completely dumb. So, and that's why you as a trader, if you're just reading the tea leaves here, this is why, the last few years I've had some of my best trading years ever, because I'm just looking ahead. I'm like, it's not a crystal ball. It's just common sense. And the market doesn't have any of it.
You know what else? I mean, it coincided with, we know what you talk about, stupid money and things happening. Look how the top coincided. What stocks led that last rally the week before I was gone?
Risk on stocks, the meme
stocks.
The
dumb money. Yep.
Well, I mean, it was full risk on. At one point, everyone was thinking the bottom was in. You started seeing the analysts flip, right? And I mean, that's usually when the bulls get caught. I mean, this market loves to hurt where it can hurt the most. And I always go with that quote. And I felt like everyone got to the point where it was rah, rah, bull.
It was.
And Clearly, you got it right back into you, and so this is how optimism can also kind of lead you in the wrong way, because I feel like everyone's just still optimistic that we're just going to get a V bottom and go right back to all-time highs.
That's what they keep thinking.
Everyone
That is
just wants
exactly
this.
what everyone wants to have happen. That this is going to be, bear markets just take time. And, you know, in 6 months, we'll be right back up to all-time highs. Oh, maybe it's going to be a really bad one. I'll have to wait for 12 months to get my money back. Ask them in Japan. 30 years. They're still down 50% from the highs. It doesn't have to happen that way. You know what happened in Japan is that they just got the rates so low they could never bring them up again. I mean, and obviously the markets have just been slaughtered over there for years. And, you know, they come back a bit, but they can't even get back. I believe the high in the Nikkei was like in 1992. It's like 30 years ago. Can that happen in our markets? I don't think so. I think eventually we will get back to all-time highs, but I don't think we're getting back to all-time highs next week or next month. So to come in here and say everything is okay and rosy, which is what the market was doing a week and a half ago. We were oversold in June and July. You know, we were oversold and we needed a bounce. We got that bounce. That bounce was way more than was deserved. And that's why, you know, I kept selling stocks into it. Am I going to rebuy some stocks here? Yeah, you know, we could talk, and, you know, we've been talking bearish here. I'm not rah crash. I'm just telling you that the sell-off from Friday was justified. So let's do a 50%, Joel, on the recent
we did.
move.
I
Let's
figured
do it
that.
right here on the charts on the SPY.
Yeah,
because it's a good exercise. Remember, the stocks are trading waves. So now it's just, if you're selling stocks now, you're doing it backwards too. So I'm like, okay, everything I sold in the last 2 weeks, I'm like, am I going to rebuy it all? No, but maybe I'll nibble, maybe potentially, because, you know, you get to these 50%, they do work. So Joel's going to do it right now. Draw 50% of the move from the bottom in June to the top in, you know, a week ago in August, and see where it is. And Joel's grabbing it right now. That's on the S&P. I'd like to see it on the SPY as well.
Yeah.
Because I track SPY.
Right there, 30. This is called. I did the exact number this morning, and actually, I did the exact number on Friday. When I looked at the market, I saw it failed. I mean, all the damage was on Friday. I mean, it got almost to the high for the week on Friday, but it comes in at 39.8375. So instead of looking backwards, folks, and let's look forward. Right? Let's see if the market can come, you know, 4K, whatever you want to call it in the spider, 395. You have an area. Also, you have a daily low there. So this is what the market wants to do. Every move has a counter move. We had the move, we had the rally. Now we're coming back down. And we're coming into a scary area because we blew through the 3,900 handle and we blew through the 4,000 handle. And now we're coming back to home. There's a daily low at right under there. So that's what the market has to prove. It has to prove that this was a good rally, a good rebound, a little bit of a pull, a substantial pullback, find support around 4K and rally. If not, I mean, this is thin. Between 3,900 and 4,000 is really, really thin. There's nothing to lean on in that area.
So what do you guys feel is the bull case here?
The bull case is we bounce off the 50%. We get another decent data point in September where we actually see the CPI coming down more, and then the bulls grab it again. It's there. So this isn't going to be a show, and, you know, we just did a 10-minute rant on the bear case, but the bull case is real too.
There's still more on the bear case. I could add to that, but we'll
can if you want, Mitch. We don't, you know, we've been talking for, you know, we haven't let you chime in here too, so we'll get your thoughts here too. But there's a case. There's a case for the bulls as well. I would say, you know, now, as much as we were overbought a week and a half ago, you know, we just gave, you know, so much back so quickly. Like, look at a stock like Square. Do you restrike at 60, Joel? I mean, I just sold it at 91. Yeah. I bought this at 63. I sold it at 91. Obviously, swing trade. Now I'm going to get another shot here, probably in the 60s. As it bounced the first time. I mean, you got good support down there. What about Shopify? We talked about the 30. We've bounced there 1, 2, 3, 4, 5, 6, 7. And I'm just looking at this 8, 9 lows in the whole $30 area on Shopify. Do we bounce there again? Because we're going to try it and might try it today. Do you take a shot the first time? I think you do. So I'm giving you some potential. If it takes out 30, my stop out would be the low of the move. So go 29.72, maybe you give it to 29 because you don't want to get shaken out for a penny. But I mean, risk reward, you could say it bounces there again. Your momentum traders won't touch it. But I'll tell you one thing, the momentum traders aren't having a good year. The momentum traders, it's a contrarian that's having a good year.
Too big a swing.
The Momo traders are getting chopped up because they're like, oh, here we go, we're coming back. And then all of a sudden now they pull the rug again. Contrarians are killing it this year. Momentum, not so much. We go into cycles. It's contrarian cycle, Momo cycle. 2020 was a Momo year. 2021 was a Momo year, really. 2022 has really been a contrarian year where you've had a lot of chop. You're buying and you're going. I mean, overall, it's been a bear market, but it's kind of been a contrarian's market too. So contrarian would say, I'll take another shot at 30.
Down, yeah. These tech stocks have come down more than they're way down more than the 50%.
The growth ones have been hit.
Yeah.
I mean, the high PE stuff has really been hammered. ARKK is 41, like it was like 53. The growth stocks have been hit. I mean, but then you have stocks like Zoom. Well, that's even interesting, Joel. I mean, you got the Malo, it's still holding it there. So
you better hold on there, Kathy. Hold on, Kathy.
But it's come down hard, so it's hard, Mitch.
What happened on
say,
woohoo? Did they have earnings or something? What happened last Monday?
Yeah, they had earnings.
I don't like them.
But you're at support. I don't short on support. I short through support. Okay. So I don't want to short at support or predict. You can make money predicting it's going to take out support, but I know a lot of times I'd rather wait until the support is broken. So it's almost still a buy until that support is broken when it gets back there. Support is support until it's broken.
All right. Well, I'll add I know that the chat doesn't want to hear about it, but I can add a little bit to the bear case.
Go back to the biggest
thing. The biggest thing for me is not only the stocks, it's now the whole talk that you're going to get now with quantitative tightening. You guys have heard me mention this plenty of times. On September 1st, something changes. What changes here? Well, the Fed plans to reduce 8.5 trillion of the balance sheet starting on June 1st, right? This was about 30 billion in treasury securities and up to 17.5 billion in agency mortgage-backed securities. Now that cap rises here. This is when we really start going more into a quantitative tightening stage. On September 1st, those caps rise to 60 billion and 35 billion. So the roll-off gets all the way as high as 95 billion. This is when I think you really start seeing the Fed's kind of rolling off the balance sheet affect probably our equities. This is going to go ahead and take the liquidity away from the market. And this hasn't been done as high as it's done now. And the reason why it's getting done this high is because the balance sheet has more than tripled, right? Yeah. And so now you're going to start seeing that come into play. And then we also get comments like we got on my show on Friday, Stock Market Movers. I had Stephanie Link on, and she's pointing to also the same thing that I'm thinking about is in inflation. She said the annual inflation rate in the U.S. slowed to 8.5% in July from an over 40-year high in 9.1. Link said that high natural gas and oil prices could get inflation reaching new highs again. And so we just need to keep on watch, at least in my eyes, this energy inflation. Will it come back rampant? Because if Nord Stream Pipeline 1 shuts down and we still get more battles about oil and we get OPEC Plus talking about cutting production, watch out inflation. That's the bear case. And then also to increase the bear case a little bit more is September statistics. The Dow has fallen 11 out of the last 18 pre-midterms in September, going back to 1950. I know everyone likes to point to statistics towards the upside, but the statistics point to the downside in September.
Yeah. Mitch, and a good point here. I mean, we can see the commodity prices in front of us, so that helps us to predict inflation to a certain extent. And to your point is, commodity prices really, troughed in July, and we've been coming back up. So that's not helpful to the August number, which will be coming next month. Yeah. So, if we start seeing inflation tick higher again, I was saying it's not good enough that we've just peaked. If all of a sudden we didn't peak, we're making new lows on the move. I mean, that bear case is phenomenally bad for equities. So we can't start seeing CPI coming in the 9s. We cannot start seeing that, because if that happens, Katie bar the door. This Fed is going to get the most hawkish we've seen, in 30 or 40 years. So, I mean, that scenario is a horrible scenario for the markets if we think that inflation hasn't peaked. I'm saying I think inflation has peaked. I'm saying I'm still not sure it's good enough for Powell. So
Exactly.
that's
It's not coming
and that's
fast
why the
enough.
equity markets are selling off. If it hasn't peaked, we're in trouble on equity prices.
Well, it's interesting definitely to get comments from someone as advanced as Stephanie Link that she even thinks that potentially it could go higher. And so I don't think I'm the only one in that camp now. And I think the one thing that we need to start looking at is, are those June lows really going to hold now? That's what everyone's going to be pointing at. And of course, you're probably going to have some bounces here. And I don't see it wrong in how I think Joel's looking at it, 50%. We could get a bounce today. But will that bounce hold? And will we actually kind of get into a chop zone here? Or will we just come back fighting down those lows?
I think, Mitch, we've got to be selling rallies. I think you've got to come in and you're going to get another bounce. It's a likely candidate to bounce around 400 SPY. It's close to the 50%. It's likely, the buy the dips, a 2-day move, you get the overshoot, and maybe you do get a bounce here. And then everybody be like, rah, rah, the bear market's over on CNBC. But don't believe it. I think what you're seeing happen is just playing out. If nothing goes straight down, we're not going to go straight down to those lows. There's people who are like, what can I buy? So you will get more dips. You will get more rallies to sell. If anything from 2022, we've learned we don't have to chase in this market. As much as people were panicking and selling the lows in June, they would have been much better to just hold on and sell the rally in August. So I think rallies are still to be sold. Again, I'm not going to sell on a day that we're down, on basically 24 hours. We just lost 200 S&P points at 24 hours of trading. It's hard to come in here and say, I'm going to sell stocks now. I was selling last week, and 2 weeks ago. But, it's to as much as like even Kramer, Palo Alto Networks, he's on there. Oh, great quarter. You got to buy this thing. Wow, it's 578. Now it's 553.
Didn't he call the bottom last week?
Well, what did he tweet? Or what did he say? He did say something. I mean, and we pick on Jim Cramer a lot. He does make some good calls, and Jim Cramer does do good every once in a while. But, there's that joke inverse Cramer Twitter handle that always goes the other way. But, this year has been a rough year for Cramer. You know why it's been a rough year for Cramer? Because Cramer is a pure momentum player. If the stock's going higher, he's bullish. If the stock's going lower, he's bearish. Those calls killed in 2020. But somebody's got to tell Jim, we're not in a momentum market anymore. We're in a contrarian market, and that's where he hasn't adjusted. See, I try to adjust. After 22 years of trading, you got to kind of figure out what kind of market we're in. We've been in a contrarian market all year. The Momo traders have been getting chopped up. Jim Cramer is a pure momentum trader. Oh, the stock is going up. It's going higher. Higher highs equal higher highs. There's that whole, trading. And then, lower lows equal lower lows. This has not been that year. This has been the year of the contrarian. Joel, you've been a contrarian at heart for a long time. Sean Udall's a contrarian. These traders are having better years here because of the contrarian market that we're in.
He's a tough position there because negativity doesn't sell ads, right? And so being on a major network 100%. Like that,
100%.
I mean, so he's handcuffed. I mean,
a little bit.
He really, he is. I mean, no one wants to hear that their portfolio is going down. No one wants to hear.
And I think they probably say that to them, behind. Like on this show, we don't care, so we're speaking the truth.
Yes.
I don't care. Mitch doesn't care.
Yeah.
I'll have short stocks. I'm market neutral. I'll tell you when I'm, raising. I try to say what I'm doing longer term. Obviously, the short term intricate trades, that's too fast, and we do, educational stuff on that. But I try to tell you when I'm feeling like, we got some swing longs going. I'm a little biased to the bullish side. I'm a little biased to the bearish side. But yeah, Cramer, to your point, Joel, completely handcuffed. He's got an obligation to probably stay overall bullish. People don't want to hear about their stocks going down. So, we pick on him to a certain extent, but to a certain extent, he has no choice. So, Jim, we do love, Jim Cramer. I laugh. He's a funny guy. He's just had a rough year because he's got those momentum opinions, and it's been a contrarian market.
All right, let's go ahead. Let's get out of the macro talk. I wanted to get into a conversation on the battle for U.S. For EV buyer incentives. So as we know, with the Inflation Reduction Act, there's new rules on EV incentives that are requiring different requirements from automakers to source more of those materials here in North America. Just last week, we saw Ford hiking the Mustang Mach-E due to battery cost. This is starting to affect all automakers as they're going to have to go ahead and come up with a plan. How do we attack this? How can we get these materials sourced here in North America so we can get those incentives? But also, how much will that affect the cost of the vehicles? And we've already seen these prices soar. It could continue having these prices soar even higher, because if we're going to make them here, it might just cost an extra 20,000 or so.
It is an issue if we're going into a recession as well. And like I said, the rich people are going to buy what they want. They're still rich. They're not losing all their, even if they're asset wealth, they're not hurting. So it's never been that customer that, the recession's effect. It's the fact that we had to step up. We had a step up customer when we were in the full expansion, that people were buying stuff that they probably shouldn't have been or they couldn't afford. It's those customers that they're going to struggle to sell to. So, Tesla, the same thing. I mean, the rich are going to buy a Tesla. They want a Tesla, they're going to buy a Tesla. But, as those prices come up, it brings people who are in the middle class maybe out of the price range for that stuff. So it's not good. I mean, and especially going into a recession, and especially when cash is going to get tighter for a lot of people, and especially if you're going to have a more restrictive Fed, it's not good for these stocks. And I think the prices are showing it. You can look at all the startup EVs that would really rally a month ago, and they're all started selling off hard. I mean, Rivian was $41. It's $31 here in 1, 2, 3, 4, 10 trading sessions, Joel. Rivian just lost 10 points. I mean, there's, and obviously the big guns, Ford, GM are starting to come off here again too. They were doing pretty good, but they had a bad day on Friday. Obviously everything did. Yeah. So I think it's a tough trade. If you think we're going into a recession, which I think we already are, EV is tough right now. I think we're coming out of it. Maybe you want to be a buyer, but as you're going into it, I don't know if I want to buy EV companies.
Shouldn't have broke that trend line when I'm gone. I hate when that happens. And
this is the year of the trend line break.
What about Apple, man? I remember how I was having such a hard time. I'm like, whoo, I'm just like trying to make it perfect. And it definitely, I mean, it's just amazing the way, it all happened on Friday. So look at it, Friday's price action, like for the week, from my perspective, I mean, we got to get green at some point. I mean, until we go green on the week, that close is what? It's over 30 handles away. I mean, I know they hit it after hours, and I know they hit it overnight, but I mean, until we get over, what is it, 40, 59, 50, I mean, I don't see how you can even be optimistic. Do we have any catalysts this week? I mean, we're through
with
earnings
a lot of
season.
Earnings again. I never seem to leave earnings season anymore.
No,
I can give you the names here. So Tuesday, we don't get much today. We had Pinduoduo, which we can talk about in a second. Yeah. Tuesday, we're going to CrowdStrike. We're going to Hewlett Packard, HPQ, get Amba, get Best Buy, ChargePoint. Wednesday, we're going to get OKTA, Viva Systems, Five Below, MongoDB. Thursday, we went Lululemon, Broadcom, WB, Oli's bargain outlet or whatever, AEO, CPB. So you get a few earnings. You're getting a few. There you go. Oh,
and Five Below, also known as Seven Below for us.
Look, oh yeah, Tuesday Chewy. I didn't even notice Chewy. How did I miss Chewy? I got to write that on my list. I don't know Chewy.
Yeah, you guys can get this calendar.
See what that
on our
guy's
Twitter.
doing.
If you guys want to check this out, definitely check out our earnings calendar. We put it up on our Twitter every week so that you guys can follow along also with all the earnings. All right. Should we go to let's do PDD first, and then we'll do a little outlook going into the week. All right. PDD here, earnings coming in at EPS at $1.13, beating the 39-cent estimate. Sales at $4.69 billion, beating the $3.49 billion estimate there. Also to note, last week we got that comment that the U.S. audit regulators forged an agreement with Chinese regulators to inspect and investigate registered accounting firms in China and Hong Kong. Will this kind of help the PDD story?
Joel, it's tough because it's run so far.
China playing nice.
You ran up into the earnings. You're running. You had an awful day Friday where it reversed, but now you get back right up there today on the earnings, but you got all kinds of overhead supply, 66, 67, 68. So I'm like, I see a potential 3-4 points up, but I see a lot more down. So, and you always care about those earnings reversals there. So China got some love last week, Joel, because they were talking about opening up the books. So, that's what the headline was. That's why you saw all the China stocks reverse there. I believe it was on Wednesday. It started Wednesday, Thursday, because they talked about opening up the books. Is that going to really happen? They've talked about this before. Every time Chinese stocks rally, it just seems to be another selling opportunity, hard to chase.
It's funny because before I left, you were talking, and you were looking. You really thought China was going to be like the negative catalyst, like on the downside, right, for something to happen. And it just goes to show. I mean, you don't know. I mean, of course,
No.
Jackson Hole, there was a lot of anticipation, but I mean, that pre-market high, I just don't think you're after our pre-market high. I mean, I just don't think you're going to see that 67.45. All these people getting their money. Oh, I should have sold on Friday. Wait a second. It's back at Friday's levels. Get me out. So I would focus. You got a good number right here, 63.69. That's Friday's high. Let's see if you can hold that. And then, man, the close is way down there at 57.57. But make sure you take out Friday's not high, hold above it, and maybe reach for those other levels. But then again, you might hit a road like 65. There's a couple highs too. So I think you might have missed the sell the pop opportunity. But see what happens during the regular session. It's already traded. Wow, 4.8 million shares.
Big time, yeah. Big time volume here.
All right. We did get some news that just hit the tape at 8:01. Enphase Energy to acquire Greencom Networks. There's no terms disclosed so far here.
Is that public?
I don't even know about Greencom Networks. I just know they just literally hit the tape there. So I just want to make sure that. Does anyone know Greencom? Let me just take a look.
I don't know that company.
It might be
maybe it's private.
Yeah,
nothing. It's probably nothing burger for Enphase. It's trading down with the overall market here. So, I mean, there's a stock, Joel. You want to talk a stock that's been strong? That hit a new all-time high.
Yeah, that 300 fight.
First Solar, Joel. If you want to talk the sector that just exploded, so First Solar, new all-time high on Friday before the rug pull. ENPH, not quite, but I mean, it's made a new all-time high on the move. These solar stocks have just been nothing short of incredible, the comeback they've had. And I do think it's a selling opportunity just because they've come so much. None of the evaluations were cheap to begin with. We talked about it back in like May and June, like eventually these solar stocks, might turn it around if the market turns it around. And holy, I just didn't see a rally of that magnitude coming. But it's been an impressive move for these solar stocks.
Definitely something we always got to keep on watch.
That First Solar traded over 300 back in 2008. So not quite an all-time high, but
took a little while to get back there.
Yeah. Pick your points in this one. I mean, for the First Solar, I mean, you haven't had a red candle like this in a while. So once again, focus on Friday's close. Is got to treat that as major resistance now with it trading lower, already taken out Friday's low. Enphase, same. I mean, I don't know if this is a big deal for it, as you mentioned, trading with the market. I mean, room down to 264, and then it gets that was earnings from 220 to 260. So you don't want to see that gap. That's still $21 away. Wow, they're holding up strong. So solar's been a place to hide. Let's see if it continues.
It has. It's been one of the top sectors for sure, holding up. So.
All right,
Mitch, we're at our guest here.
He said he'll be here a little bit late, but he should be here, just joining us in a couple of seconds.
Okay.
I did get a message that he'd let me know it'd be closer to 35. I'm guessing we'll be getting him on in just a few moments here.
Sure.
Let's go ahead. Let's take a look at some oil stocks because they did start moving up last week. Now the question starts coming. Of course, everyone's keeping an eye out on these oil stocks. Will they get the lift that's needed? Last week, Oxy went through the highs. Can it keep going?
Oxy is the one that I would want to own on a pullback. I'm not chasing any of these oil stocks because, again, as much as you think like, oh, yeah, I want to be in Chevron, it's kind of already had the rally. I mean, we already had the big rally. 182 all the way down where they got oversold down to 132, and now we're back up to 163, 164. I mean, now you're running overhead supply at all the old all-time highs on all these stocks. ExxonMobil completely rejected off 100, Joel. Completely rejected off with the number you would think. I mean, sometimes this market just trades technically 99.91, 99.86. The double top is in place. I'd sell ExxonMobil, right? I would sell it. So even despite that, I think, and I still am a believer that inflation has peaked. So I think the commodity prices could start to come back down too. And if we go into recession, these stocks are not going to be immune. It's been an impressive oil rally. Yes, the chat will be on me. I've been wrong about oil for a long time. I was obviously, it came back down in June and July, and I should have rebought some oil stocks. And I probably was right, more in July, saying that probably oversold and it's time to start getting long, especially on the Oxy. I was absolutely right. But I'd be a seller of the oil stocks here now. Everybody's silent.
All right. No, I was going to let Joel give some technicals there, but we'll keep watching there.
I see Tim there.
Yeah. I'm going to get Tim on right now. All right, let's go ahead. Let's get into market structure edge. You guys know it's time. A little shimmy. Let's get into it. Market structure Mondays. Tim, welcome back.
Good to see you guys. Happy Monday to you. Look at those.
You got to get a little shimmy when you get the market
shiny,
structure.
happy people. That's right. Yeah.
Where are you today, Tim?
I am, as you might be able to
Steamboat.
tell.
Steamboat, come on.
I'm in
I should
beautiful
know.
background.
I've seen it before. I don't even know a steamboat.
And if you look over, you can see a little flicker just over my, I don't know, but to me, it would be over my left shoulder. I guess to you, it would be right. See that little flicker of flame? I've got the fire pit on out there on the on the patio.
The cool down. The cool down's coming.
My phone says it's 43.
Ooh. Oh gosh.
Yeah.
I miss the weather. I miss that weather too.
Yeah, we're buying.
I'm
We're
45 bid.
buying that low.
I'm 45
We're buying
bid.
the low. We're saying it's going higher here today.
Yeah.
I'm saying the temperature's going up. Me and Joel are along
The algo's already hit.
45 bid.
5
Sell some at 50.
I'll say the action there is fast trading. That's fast trading action.
We're all over everything. Joel and I watch a baseball game and we're like just talking the averages and where it's going to go. Get bet on everything.
That's been a while.
That's been a while.
All right, Tim, what's going on? Give us some market structure here. We had the options expiration before I left, and the market, it held in there till Friday, the old sneaky Friday, almost get near the high and then finish near the low. So any positives out there first coming out of you? We could talk about the negatives, but any positives you could see from the retreat last week?
Well, I don't know if I would look at I wouldn't look for positives per se. I would look for things to trade. So, and there are things to trade.
Well, I like that.
There always are, right? So to me, I don't prefer to trade during options expirations, but if supply and demand give some signal, then we'll use those. How can you look at the market from a positive negative perspective right now? I don't know. I saw on CNBC Squawk Box. Not that I would watch that. That Joe,
I like that.
that Joe Kernan and Mohammed Al-Arian have a bet that will result in going to some sports event on whether the market breaks through 3,600. I don't know. I don't watch those kind of things.
Mohammed on the bearish side?
He's actually on the bullish side.
Yeah, he got on the bullish side. I saw him.
Now I'm
flip.
scared. Mohammed's good.
He said 4,400 is his target for year end.
Really?
So, yeah.
So he's on there right now. Actually, look at this. Mohammed.
Yeah. So we'll see.
Good today.
Yeah.
I'll take that.
I always enjoy what he has to say. Well, to me the thing to think about is there something that the market will do that will tell us how it will respond to something that the U.S. Federal Reserve does, and I put that qualifier in there for you, Dennis, because there's because you're a Canadian, so I have to put a qualifier in there. But will the market tell you what to expect? Why does the market go up sometimes when Jay Powell speaks and go down sometimes when Jay Powell speaks? And people will say, well, we're expecting a Fed pivot, and that didn't happen, and so the market falls dramatically. I'm sure there are certain elements of that. I think it's very important for traders to understand that it's not rational thought that leads to that. It's people's bets.
Yeah.
Rational people don't destroy their own holdings by 1,000 Dow points in response to Jay Powell. That's not the way rational people behave. Let's demolish our retirement accounts. It's not how investors behave, but there can be bets. To me, the good news is that the data will generally show you what's coming. And Joel, that's my answer. My answer is are there positives and negatives? Well, the positive is generally you can see in the data what's going to happen. Not perfectly. I mean, I couldn't tell you perfectly that Friday would be the down day, but we certainly were telling people that ahead of August 31, when index futures expire, what you want to watch is the supply-demand balance in the market into about T+2 to T+3. That's trade day plus a couple of 2 to 3 additional days for settlement. Now, the official window is T+2 traders. So that is, if you're big institutions and your aim is by the end of the day on August 31st to have cleared positions and moved things, then you would do it today at the very latest and maybe Friday, just to be safe in case there are some difficult elements in there. So we said, well, there's risk. Remember that when I was on Monday, we talked and I said, well, the Dow could go down 500 points today. It did, right? How is that? How is it possible to know that? Well, new options traded that day, and we could see that demand was down about 2% last week. So 2% would be roughly 500 to 600 Dow points. Son of a gun, that was pretty good, right? I didn't expect that the market would fall apart from there because the demand curve has been very slow in declining. So that tends to tell us what to expect. And traders, maybe I'll show you what I mean by that. And there is an important, I think, and there's a economic point to make here. And I don't want to forget to do that because I think that there's symmetry between economics and how the stock market works. And so I don't want to get away from that point, but I do want to show you this. So here is, I think you can see this. Here is market structure edge. So this is what I mean by supply and demand. Here's the broad market, and here's this see this green part of the graph? That is demand. It's just an algorithm. It's no different than the models that the Fed runs to try to understand, well, what's the economy doing? Well, they have models they run and data inputs. Well, we have models we run and data inputs to assess the supply-demand balance in the stock market. There's a difference between the stock market and what the Fed does, however, and it's a great lesson. The rules of the stock market provide a fulcrum because everything that happens in the U.S. national market system, I will distinguish that from over-the-counter stocks, which are a whole different beast, and in some ways a much more free market than is the national market system. But the rules provide a fulcrum. So there's a fulcrum and a teeter-totter called supply and demand. Well, the economy is the same way. The currency, the dollar, is supposed to be the fulcrum upon which we assess supply and demand because people put people and money, labor and capital, businesses put people and money to work to make stuff. That's labor and capital. If the currency is stable, we can determine how much money and how much labor to put to work to produce something and how to price it and what the curves are. Well, if you constantly move the fulcrum to try to balance out supply and demand, over time, it will become very difficult for businesses to determine how much money and how much labor to put to work to make things. This is why we have these incredible boom-bust cycles. And the interesting thing, and then I'll shut up on this subject, is that in the U.S. Constitution, in the one sentence that articulates the ways that the U.S. government can carry out the specific ways that the government can carry out its general responsibility to promote the general welfare is fixing the rate of exchange of the US dollar. It's right there. You can read it in Article 1, Section 8. So if the Fed did that, we wouldn't have this trouble. You could earn a decent interest rate on your savings. Businesses like mine could determine what is our cost. I mean, we're doing a very careful analysis right now because of the pressure that's beginning to mount on consumption. The Fed should not be trying to change the labor side of the equation or the capital side of the equation, because that's our job as businesses and consumers. And to say, well, we want to slow consumption is asinine. Our economy is built on consumption. 72% of US GDP comes from things we do as consumers. So if the Fed tries to slow that down, it's wrecking the economy. There's only one thing it can do to address inflation: fix the rate of exchange. Then we can figure it out from there. So now back to this data. That's how the stock market works too. The fortunate thing is the fulcrum doesn't move. So we can see supply and demand more clearly in the stock market. So when demand begins to tail off right after options expirations, that's those 3 green squares, and the supply side is skyrocketing, what will the market do? It will tip over. It's not complicated to figure out. So you could know that before Jay Powell speaks. If you see that happening, we'll just step aside and let the market do its thing. And then you want to find, well, where's the money going? And so here's one difference I would have, Dennis, with I heard your comments about XOM and energy. I want to show you the supply demand curves across the market. Broad sentiment's at 5.7. It's not below 5 yet. There's still a little excess demand. If we tip below 5, then we have real trouble. And I'm not saying that's going to happen, but let's look at airlines and cruise ships. Demand imploded, supply is fairly level. I've got stuff in our program here, very strong demand, falling supply, and I've got both. I'll show you a short we should do. Building materials, collapsing demand, rising supply. Well, it's not good. You can go all the way through the market. Let's look at tech. Let's look at tech, because tech's the bellwether. Well, collapsing demand, rising supply. Industrials, which have outperformed, collapsing demand, rising supply. Don't want to be in any of those. But I would take energy because it's got steady demand, and now the supply is above trend. That's why the prices have slowed down, but it is tipping down. So that's the first place I would look for things that would outperform the market. And I could go down to say, well, I like to trade volatility. So I look at now there are only 3 volatile 10s left. That trade's breaking down. But if I look at them, guess what they are? They are all energy stocks. And they all move about 5% a day. I own Laredo. And I don't usually own something through a Jay Powell speech. But I kept Laredo because I was up in it. It was the whole market's down, I'm up. It's it depends on where you buy it. So, right. So LPI, AR, EQT is the worst of the 3, but all of those are reasonable trades that could, if any of them are down 2-3%, you could probably make 2-3% because they're very likely to rise at least that amount. So if I looked at the whole market, I guess that brings us full circle, Joel. I would still say energy, despite a strong dollar, gives us the best supply demand equation. Now my window, I only look 3, 4, 5, 6 days out. Then everything could change. But at the moment, that's the place to be.
There's still strength and energy here at the moment.
Yep.
Now.
Yep.
I'm probably early again here, Tim. I'm always early.
Well,
I'm one that's always like 3-4 days early. You'll probably get this rip roar, and Tim will be right. They'll go up for 3-4 days, and then then the collapse will happen. So,
well, let's look at XOM. I mean, you're not wrong about XOM from a supply side issue because the supply has risen above the trend, but the demand side is still pretty good. It's going to be a non-linear return.
It kind of looks like it's converging, though.
Well, see, the green part is demand. This is price. So price fell on Friday, but the demand side rose and the supply side fell. So exactly, because I think you could make, now XOM is not a volatile stock, but you might ride out a dip in the market buying XOM because it might go up 1.5% and the market does the opposite. Well, that's a 3% return, right? In a sense, if you're out of the S&P 500 and you're in XOM, I like those kind of trades. I traded ED last week because it moved opposite the market. I like a big and stable when it's and then a volatile stock. I kind of pair those things, and generally you can produce a return that way.
All right, so this is kind of more of a, I don't know if this is specifically a long idea, but definitely a long area that you can be watching right now. Now, what's a short area or short idea that we can be looking for?
So let me ask you, what if long is diverging supply and demand, what would be short? Not a trick question.
the opposite. So
Exactly right. That's exactly right, Mitch.
See,
Mitch. It's converging.
got my star today. Don't worry.
Right. So you want to find something with converging supply and demand, such as, I'm not knocking Granger. It's just that they've had they have a huge demand. In fact, there are three trading lessons right here in this single chart for you traders who trade supply and demand. But here's why it's a short. Demand, the green part of the graph, the gray is the price, closing price, is plunging and supply is rising. What is the probability that GWW declines? Well, very high, right? It's not perfect and it might not be linear, but that's the kind of thing that's very likely to produce a decline. The opposite. So you could trade one short and one long, you might double your returns. I'm just saying it's something you can do. And look, you could trade just Granger. When demand hit 10, right here at August 1, and supply is way below trend, buy it. And then when supply jumps above trend, about at options expirations, August options expirations, leave. Now you can go short. Buy, leave, short. And you can do all of that in 1 month and produce a very nice return. I'm not saying it works perfectly.
How often, Tim, do you reverse your trade? This is such a good conversation, and there's so many traders, and I've struggled with it too. You're in a good long, and you're like, oh, it's coming up, and I'm like, boom, and you get out, and you're feeling great about it. Well, if you're really feeling great about that sale, why not go short it too, and take it on the other side? Reversing your trade completely. Joel's good at that too.
It's hard. It's hard.
It's a hard thing to do. How often do you do reverse the trades, like where you just turn around and you actually go from long, sell, short, all in the same boom execution?
I need to learn from you, Joel. I don't know. So I know the long side very well. I would describe myself as an expert in supply demand data like this, but I'm going short. I don't have enough time in the saddle. So I'm queasy about it, Dennis. I have a very hard time doing something like that. Now there are edge users who send me notes all the time, like, whoa, that was a great short. And I've not gotten there. It's on my list of things to learn because I think we could double our returns by being very good at that. So Joel, we're going to have to learn from you.
Market goes up most of the time, Tim. So
it does, right?
Dennis, you do your with the reversals too. I mean, I that's one thing.
Try to do it. It's tough sometimes.
Yeah,
too.
You try. It is, because then you also have the regret, like, oh, I sold it. It's still going up. Now I'm short.
Now you're short. Now you're losing. Yeah. You're totally fighting the momentum when you're doing that too.
Yeah.
So it's a tough trade.
It's tough.
Well, that's where I think context can help traders. Always beware. To me, I think you should always beware of the 3 points in the month. New month, new money. Money will come in. People are putting money to work every month in their retirement accounts. That has to get deployed. It's the law. You can't sit around if you're a fiduciary who says in your prospectus that I do the following with somebody's money. You're going to have to put it to work. Now, if people stop putting money into the market, we're going to see that across the broad market by seeing falling broad demand. But they're going to do that. Then at options expirations, all the bettors, all the people using substitutes in the form of options and futures, they're going to true that up. Well, then you should know that. And then month end, people true up as well. So if you're going to go long or short, think about that. Think about what is happening at those junctures, and I think it improves your probability. Now, that's coming from somebody who's lousy at shorting, but I think it's something to keep in mind.
Well, definitely, guys, and don't forget, like always, you guys can keep up with this data. Just go ahead and check out Market Structure Edge, check it on out, and you guys can do the same thing that Tim Quast is doing here. He's just going with the data, just like the Fed, right? Data dependent.
Just like the Fed, yeah. I hope we're a lot more accurate than the Fed. The Fed is just miserably inaccurate, you know.
Yeah, I'll put my bet on you, Tim. Don't worry about it. Let's go ahead. We're gonna wrap up. We'll have you next week. Appreciate you, Tim. All right, there you go. I got him on out. Now we're wrapping on up, guys. Like always, check on out like Market Structure Edge. You don't even need a credit card. Check it on out. And Tim was talking about last week that they're moving slowly but surely towards more of a month trial. So if you haven't checked it out, I would definitely go ahead and do so. All right, let's do a little wrap up here. We got about 5 minutes towards the bell. Any levels that we should be looking at, Joel?
Boy, we're in no man's land here. So the PM, pre-market low is obviously important. Holding. I mean, we test that. we hold first half hour bracket. We got a chance to rally. On the upside, like I said, I mean, I'm just gonna try and keep a perspective here until this market can go green on the week, and that's still 33 handles away. It's hard to get optimistic. There was
Yeah.
really your first down day, so you're looking for a 2-day move. I mean, we were back up at the weekly high, right? We missed the weekly high by like 4 handles on Friday, and then we came down. So pre-market low, and then you have the 50% retracement under that at 39.50. But trying to rally, we tried to have a couple rallies here, but so far nowhere near getting green on the session.
All right, we'll see what happens in the overall market. It's going to be a battle today. I wonder if ARKK can come back towards that 40. Will we break the 40?
Keep an eye on the growth names. Those will
Yep.
lead. Those have been leading this entire last 12 months. They've really led. So, ARK started rolling over, and then, the overall market actually held up for a couple days, and then eventually it started rolling over here too. ARKK has been your leader here pretty much the entire year. So if we can bounce off, and ARKK is good support down to 40, if we can bounce off there again, there's a chance to have another opportunity on the bull side here as well. So I'm kind of like, as much as I was bearish here the last, we've come in 200 points here now. Not saying I'm going bullish, but, if I was short the market, I'd probably get more to a market neutral stance at this point. 200 points in 24 hours is a lot. And then obviously seeing if we can bounce off the 50%. That's the next test.
Look at this 42, this lower 42 handle where you're trading right now in ARKK. Pre-market low is a little bit below that, but basically 4 lows in that area, right just above 42. So let's see if it could put in. I mean, obviously we're through Friday's low, but 42, Dennis, and then you mentioned that other level at 40. But I think the Bulls have a clear level to defend here. Let's just get the pre-market low, probably under. We're trading down 92 cents here at 41.92, and the pre-market low is probably right in this area too. Yeah, right here. People are nibbling. Actually, the 4 a.m. reaction 41.50. That was your pre-market low. That has to be defended today.
All right. Last chart to take a look at is, let's do Tesla after the split. Will it come down?
Again,
but has it really?
This like clockwork though, Joel. It was up for a couple days into the split. It split. It was trading up at the open, and they pulled the rug. And I mean, obviously we can say that, but then the market, everything went down. So, but it did work again here, where if you were selling that thing the day of the split, like after it did, and shorting it, you're making money.
280. Let's see what happens. You bounced off it into pre-market, 2 lows here, pre-split at the 280 area. So that's where the Bulls need to step up for Tesla coming back on the upside. I mean, you could easily see this green on the session if you're looking to wiggle out perhaps along from Friday. And where was your close? Your close was that's 288.09. Maybe scoot out there if you want to sell it on a pop at 288. Make sure you get done. In Tesla, what day was the official split in this one? What day did it start?
It was Thursday.
Wow. And then a nice little drop. So more liquidity for Tesla. Already traded 1.2 million shares. I don't know, a split on top of a split. It's going to be hard to keep track of that one.
270 is the 50% retracement level. That's where I'll be watching Tesla to see if it can get to. Yep. Of the
People asking, I am not in my new house yet. This will be the last day. You're just getting a look.
Yeah, is that the bullish indicator for the market?
Not in the new house. I'm living in the new house. The office has not been moving. I'm moving in the next couple days. I have to be out of this place August 31st here. So this was just my temporary place of habitat. So I will be out and into the new house here next day or two.
All right, we'll see what happens. Like always, you guys can keep up with some tickers on Pre-Market Prep Plus. Joel Elconin, don't forget it. Check him out on Pre-Market Prep Plus. We're going to wrap on up here, get you guys on out of here. And we got to know, this is going to be probably another event. Come on, guys. They're asking me already. When's the next Pre-Market Prep event? I have to get another
settled.
one.
I got to get settled and everything, so it'll be a little bit, but
eventually it was tight getting that in for the last one, but Dennis maneuvered it.
Yeah,
so
we'll get
all
there.
right, glad to be back. We got our short-term levels here. See what happens today. Of course, you want to see that pre-market low hold. You want to see that 0675. So that's it. Sign it out. I'm going to go cover some tickers on Pre-Market Prep Plus. And Dennis, I'll check in with you later on. Great to be back, guys.
See you guys. Thanks,
gals.
Joel. See you, Mitch.
All right.
Thanks,
See you,
everyone.
Dennis. Have a good one. All right, guys. I'm going to get ready to go towards live trading. Of course, we got Lord Ryan. Dune will be out today. Looks like he had a long weekend. You guys know how that party life can go. Sometimes you're going to have a long weekend. Nah, but Dune's not feeling the best. He's not going to be with us on live trading, but you still got Ryan and I. I've been hot. I'm going to continue trying to be hot, whether it be to the short side, long side. You guys know how it is. It's always about being flexible, especially being a day trader out there. Now, of course, when you're looking more into swing and investments, you got to go ahead and have a little bit more of a thesis. We'll see what happens. Let's get back into the market. Sound the alarm. Let's see if we go green today. And I hope that you guys enjoyed today's show. We had a lot of macro talk. We talked about the of course, Fed Chair Jerome Powell pulling the rug there in the Jackson Hole Symposium. We'll talk about the bear case, the bull case. Rewind if you guys need to hear what our bear and bull case are. We talked about quantitative tightening. We did touch the battle for U.S. EV buyer incentives, PDD earnings, and touched a little bit on Enphase and solar stocks. Hope you guys enjoyed today's show. Let's go ahead and keep it going right here on Benzinga.